Welcome to TRADEREP. This is Shorthammer. It is the 12th of June 2019 and we're looking at Amazon. Now, since the bounce in the 1670s, Amazon has been on a bit of a tear and just been gapping through all these supply demand zones until today, where we had a retest of the 1845 by 1858 supply demand zone. Now, what I want to do is take a look back to see on this last run, what did we do when we first breached this 1845, 1858, when we popped above this supply demand zone. So this candle from the 10th closed at 1860, and this candle from the 16th of April closed at 1863, so about a 3-point difference. And the day after, we had a little bit of consolidation in these candles that stayed above that 1858 area. And then on the 22nd, we had what looks like a little bit of a pullback, but it based at the bottom of that supply demand zone and took us up for another 100 points. So this was our first 100-point move, and this was our second 100-point move. From here, 1760s to roughly 1860s. That was the first leg, and then the second leg was the 1850s on this pullback, 1845s, up into these 1960s. So here, maybe we're having a pattern repeat of a hold at the top of this supply demand zone initially, then a pullback to the bottom, and then a springboard up into the 19s. Not sure. I'm also really watching for a retest of this 1818 by 1823 supply demand zone, and potentially this downtrend line for another springboard. That could be one also. So there are multiple patterns here. I'm not going to automatically buy if we pull back into this 1845 area. For me to buy, I like to see buyers step in, and then I follow the wave of those buyers and ride it up. And for me to get short, I like to see sellers step in, and usually below supply demand areas, I like to see that either above a supply demand area or below a supply demand area where buyers or sellers step in strength, and I have a clear stop loss once I get in. And I have a clear destination target, which is either the next level or a clear level of an area where just there's been a lot of interaction as far as candles. Let's look at the lower time frame. So this is the 5-minute chart, and we opened and we pushed up into this little bit of resistance. I would have preferred a push up through this, like a strong push on the open and right into this quarterly pivot, then a strong pullback down through here, but that's not what we got. We halted in the 1890s and struggled most of the day, and I don't think it was because of Amazon. I think it was because of the broader market. There was just a lot of weakness in the market, and also, tickers like Microsoft, which are just very heavy in the market, very strong tickers that can pull the market and move the market depending on how they move. And Microsoft was kind of weak, and Microsoft was pulling back, and just the overall market was a little bit weak. And so what I want to do, because there was a channel we were in, which was the 1868 by 1875. And what we saw on Monday is when we pull back to this channel, bounced to 1868, 1875, 1868, just staying in this channel. We dipped below it, came right back into the channel again, broke below it, then after hours, back into the channel, out of the channel, bounce on the channel, slight bounce back, and then today back into this channel. So once we sold into this channel, my thought process was, hey, if we go below 1868, we may have a pattern repeat we're here below 1868, we were reaching for the 1858 area, back up, and then reach down here again, and took the post market to tap it. So once we broke the 1868, definitely saw the reach down coming, along with the 200 SMA coming up. We went back in, bounced our head off the top of that little channel, back down, couldn't really hold above it, back down. So now going forward, I'm actually going to watch for a retest of this area potentially to see if this now becomes an oversupply zone or resistance area that we can't get through, the 1868s and the 1875s. Now, if we break back above this, I'll be looking for us to retest the higher levels, the 1884s, 1880s, 1884s, 85s, into the 1890s. And that's what I'll be watching for tomorrow on Amazon. Those are my levels. And I'll be watching for the pull down that you saw when I mentioned on the daily chart into the 1845s. Let's see, where's the main intraday pivot? So the main intraday pivot for tomorrow is 1871. So that's right in the middle of our channel for Monday. So that'll be interesting. Amazon really needs to get over this 200 SMA. If this is up inside this channel, 1868 to 1875 at the open, and we tag that, we're going to need to close above that for us to be able to get a little bit of springboard action through the 1875s, hold the 1875s to take the next leg up. If we can't, and we reject there, and we go down and get both the 1868s, that may be a good point to get short, because this little channel area above, a little bit more bullish, below a little bit more bearish. And what I want to do is make these lines a little bit different. Because this is not an actual supply demand zone. It is more of what I call a swing door area. I like to make those more of like a purplish type of I don't know if it's fuchsia, but more of a purplish type of a color, this neon pinkish purplish color. So I'll be watching that tomorrow.